What is up, guys? Welcome back to the trading world. Yeah, I know it's been a bit since I've made a market recap, and I gotta get better at it, but I get so busy during the day. It's exhausting. There's so much I gotta do every day, and I'm trying my best. Hopefully, eventually, I can make these every single day. That's the end goal, but I'm doing my best, and making them at least every once in a while is better than not. But today, I definitely want to make a market recap because today was one of my favorite days in a long time. I took a trade that was essentially, if I'd taken it as I was supposed to, according to my backtesting, it was a 5R trade. I misexecuted it, got stopped out, and it hit 5R, which was really unfortunate for me. And I'm going to be taking a look at that, taking a look at how I got bias, and a lot of other really cool things that hopefully you can learn in this video. A lot of other cool trades. If you guys don't know, I review the NASDAQ futures market every single day, covering all kinds of cool trades you can take to make real money. And yes, this is real, this is legit. Watch my videos and you'll come to find that to be true. So with that, guys, we're gonna jump right into it. Very interesting day today. First things first, let's start out by first talking about something cool that I noticed on the higher time frame. If you guys don't know, you really do want to pay attention to these volume imbalances on the daily chart and the weekly chart. So what's a volume imbalance? Well, it's going to be basically a gap between the close and the open of candles. So like this, right? So here's a daily volume imbalance. Close, open. And these are going to be nice key levels that you can use to frame models off of, right? You go down the lower time frame, here's the perfect example. We rebalance the gap and then we deliver off of it, right? You see that? Rebalance of the gap, delivery off of it. Does that look random to you? No. So when the market does this, it's efficiently delivering this gap, right? So I always like to check this kind of thing to see, okay, do we have a higher time frame volume balance that we're trading in? I always like to check, and I check on the weekly chart. Just kind of looking at where the current price levels we were trading within, and I was just looking over here, and I really like this one. Just sometimes you just gotta just trial and error, just find ones that you like. Now, obviously, it's never gonna be perfect. I obviously, I kind of looked at that I even saw this, but you can see, well, the market really nicely, efficiently delivered this volume imbalance, actually, right? Look at how perfectly we deliver this weekly volume imbalance. We come down, take the low, and then deliver higher. So here is a view of it where you can basically see everything in detail. We have that weekly volume balance from June 30th. Once again, sometimes it's trial and error. You just kind of like look around, experiment, look around what's going on in the market, and you'll find cool stuff the more you do that. Once again, this is not necessary to be a good trader, but you can see how it's kind of cool how precise this is. And yes, this isn't hindsight. I had this marked out way early in the morning. So, today was really cool because we had a really obvious target. We had really obvious low resistance highs. So this was the first thing, right? You see all these highs, how they're lower from one to the other to the other, or one to the other to the other to the other, right? All these are lower highs. And then at the end of all of those lower highs, we actually had really, really nice triple equal highs. So I knew that if the market was going to give us longs, I didn't know for sure it was, but I knew if it would, that these triple equal highs, once again, the market runs back to triple equal highs, low resistance highs, which is once again a lower high, lower high, lower high, lower high, or a higher low and higher low, higher low, higher low. So we had these triple equal highs that were super, super nice. at the end of low resistance highs. These are things where it's like when I see these things together, I'm like, wow, this is going to be really nice to target for my trade, right? So I see these triple equal highs here, low resistance highs here, efficiently delivering this massive weekly volume imbalance. And not to mention that we have an overnight gap. We have an RTH gap that was to the upside. Check this out, right? We had an RTH gap. Let me make this look all nice here first. We had an RTH gap to the upside. Now, once again, with these RTH gaps, so if you don't know how to get them, it's the overnight gap. You go down here, click this button, switch it from electronic trading hours to regular trading hours, and the market's going to want to come fill these gaps back in. Go watch my video I made somewhat recently on RTH gaps where I talk about this, where I say how basically it's gonna get sucked back in like a vacuum, right? And you can see that's definitely the case here. It's one of the easiest ways to get bias, right? Look at how cleanly we actually fill it. This isn't with a gap this big. This is actually kind of rare. I'm actually kind of surprised we filled it so nicely. But I mean, you can see how nicely we actually come back in and fill this. So upon market open on at 9:30 a.m. Eastern time, you really want to be anticipating which way the RTH gap is going to be forming. You want to see, is it forming above? Is it forming below? You also want to look at prior days overnight gaps. RTH gap, overnight gap. If I say that, it's the same thing, right? They mean the same thing. So, once again, we deliver this weekly volume bounce. Boom. What's cool is, once again, I'm anticipating longs because, on the highest time frame, I should actually point this out first. On the even higher time frame, we use this weekly gap, right? We use this weekly gap. We have high time frame SMT, 4-hour changes to delivery, delivering off of it, and then I'm looking at these highs, and I'm like, okay, those look kind of low resistant. We have a data high, so I was kind of looking for us to continue higher. And then also, which is kind of cool, is you can see all of our true opens, right? 7:30. I might have marked this off a little bit, but there's 7:30 within here, our 90-minute true open here, our even lower time frame true open here. The market, this is how you identify true manipulation in the market. When you see a sweep below all the true opens, expect expansion the other direction, right? Accumulation, manipulation, we have SMT with this low in the bottom of a 15-minute gap. So now I'm expecting expansion in the opposite direction. Once again, what even are true opens? They're premium and discount levels based off of time. Why wouldn't I use just the regular open? Because the market's never going to manipulate in Q1. It's never going to manipulate in Q1. It needs time to range. You can see, look at this. It needs time for regular people to just not know what's going on, get chopped up, and then time is manipulated. Every single quarter's true open is manipulated. Boom, expansion off of that low with SMT after we've efficiently filled this gap. By the way, this is an instant V-shaped recovery. So what is this? This is Venom model. I don't want to... If you don't know what Venom model is, watch my Venom model, but you can imply that this is a BPR from here to here, and look at how the market respects that, right? After efficiently filling that June 30th new week opening gap. So that's kind of cool. If you don't know what that is, that's fine. But anyway, this is basically the trade I tried to take. This is like my bread and butter, where basically... I know when you have really good low resistance highs like this, like boom, 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 triple equal highs, and we come up the other side of the curve after, getting confirmation. This is a buy model on the 15-minute aligned with the 1 minute, right? 15-minute gap, 1 minute change in state. Once I get this confirmation, that's its own entry, by the way, on the 1 minute when we get that 1 minute change in state. But once we inverse this first center for value gap, I know with a really high probability that we're going to go run all these low resistance highs and then the triple equal highs. So this is the trade I tried to take. Unfortunately, very unfortunately for me, I misexecuted it. So you can read all this if you want, but basically I misexecuted it because my stop loss is compromised. My stop loss needs to be behind the other side of this first center for value gap, and it wasn't. And so I had to enter with 1 con. I entered accidentally with 2 cons. If I entered with 2 cons, it would have had to been on the retest of that first center for value gap. So anyway, messed that up. Whatever. We move on. Back to what I was saying. So 15-minute gap gets delivered efficiently. This is kind of cool. Check this out, right? We come down, use this 15-minute gap. We get 1 minute change in state of delivery here. So there's probably going to be, there's a, let's see if I can find it. That's not the one I want. This one I want. Okay. So this is another really easy way to get in on this move, right? The 15-minute gap, we go sweep the low. Now, why don't we go higher right away here? Well, we actually have an external gap. The market gets rejected by that external gap, even though it does inverse it. It's still rejected by this external gap. Then we come back down, and look what happens. This 15-minute fair value gap, which is this dark box, we come back down, we perfectly efficiently fill it. Check that out, right? That makes this reclaimed. So the market used it once and then used it again. That's what a reclaimed gap is. When you use a gap once and then use it again. Boom. When you see the market perfectly efficiently fill any gap, you know with a high probability that you're on side with the market. So what happens? Boom, perfect efficiently filled. 1 minute change in state of delivery. Why? Because candle body close above this series of down close candles. Right? You could also technically call this change in state, right? Just FYI, right? Candle close above a down close candle, but that's besides the point. A lot of time I'll use series of down close candles. And then boom, all the way up to those low resistance highs. The reason I didn't take this is because there's an external gap, right? There's a gap right here. But if you have conviction, which honestly is pretty reasonable to have conviction here, you could expect this external gap to break and then we go through it. Once again, I really wanted to wait for this to get broken because this is the first center for value gap, and you can see right on that close, we do get that, and then we go run those highs. And yeah, all the true opens get manipulated. Very, very textbook day. Clear accumulation, manipulation, distribution, up to those triple equal highs. Once again, stop loss needs to be, for this first center for value gap inversion, needs to be at the bottom of this gap. But anyway, we had really nice absorption by whales, dumb whales, right? So smart money, I'm gonna have a video that comes out about whales later this week, but smart money seeks the liquidity of the largest dumb money, which is usually these random market orders that will randomly hit the market. So what these red circles mean are these are the biggest market orders that hit the order book at any given time. So we had a 28 con market seller here, 47 con market seller here, 61 con market seller here. So smart money is seeing these guys because all this is public information. Everyone can see. Oh wow, this guy, his market sold for this much. This like everyone can see this. So when they see some random guy market sold for however many cons, they know this guy is just no clue what they're doing. This is a dumb whale, right? I mean, sometimes it can be a smart whale, but in the context that we just looked at, right, we perfectly filled that 15-minute gap. We started getting a change of state delivery off of this. This is going to be a confluence that these whales, because once again, whales normally enter with limit orders because they have to. They can't enter with a market order. So, I mean, sometimes market orders will be a smart whale, but in this case, these market orders, these random market orders out of nowhere, these guys are not smart whales. These are dumb whales. Selling into that 15-minute gap, right? All these guys market sell, market sell, market sell. We know this is absorption, right? Absorption to then get a distribution to the upside. So that's kind of cool. Once again, use these whales of confluence. Smart money is going to seek the largest dumb money. They're going to seek the largest dumb money to be their liquidity. That's hopefully that makes sense. Then yeah, here's that 1 minute venom, right? It's implied, meaning I'm merging these two candles together, and then I'm merging. I probably should have marked it out like this, from here to here and then here to here, but it's all good. Implied venom, where I'm merging these two candles together, and then you can see boom, venom model, right? Why? Because, well, one, we really nicely filled this weekly volume balance. Two, we swept out this sell side here, instant V shape. And then three, venom model. There you go. Boom. We have SMT into it. And what's cool is I was talking about this on stream is, well, there's a 5-second change of state off of it. I mean, you could use this one too, but this one's more precise, and I wouldn't use this because it's too small. So right there, boom, 5-second change of state off of it. Perfection all the way to those triple equal highs. And you can see, just look at how nice this was. This was a trade I took on demo, actually. I took later on in the day, I was just taking some trades on demo just for fun, and well, we had a couple interesting things. I knew we were just aggressively expanding to go fill the RTH gap, so I was like, well, when we're aggressively expanding with an obvious draw on liquidity in mind, every single low time frame gap, like 1 minute gaps, 2 minute gaps, 3 minute gaps, 5 minute gaps, all these low time frame gaps are super likely to hold. If it's very very directional market, all low time frame gaps are super likely to hold. I'm trying to get the screenshot. I don't know where it went. Let me find it. When the market is super directional, all low time frame gaps are very likely to hold, even on the 1 minute. So I was just trading demo with this in mind, but I knew, okay, well, this is a 1 minute gap, and the market is obviously expanding to the overnight gap fill. So I'm seeing all this. Once again, all low time frame gaps are likely to get used on the way when we're aggressively expanding. So, well, what did I try and do? I was just like, hey, let's just take a line time frame change in state for fun. What is that? What's the line time frame change in state? It's a 5 second. So I took this on demo just for fun. Boom, 5-second change in state off that 1 minute gap to the RTH fill. And then I stacked on this outside bar, and so this was a like 8R or 10R or something like that, and then this was a 30R, so altogether it was like 40R, and I took this on demo, and I'll show you guys my execution. It was a little, what's the word? I did kind of, it wasn't a perfect execution, but I'll show you it anyway. So I'll scroll up here. And yeah, basically some of the position got stopped at break even, but the rest didn't. And then we went and filled the RTH gap. So this was a cool fun little demo trade I took that was basically 40R. And once again, demo money, but yeah, like 40R. And yeah, I mean, there's definitely more that happened today, but I think, at some point. Oh, the last thing I want to look at here is probably trade of the day. Because once again, if you could just identify this as accumulation, identify this as manipulation, and then really wait for both external liquidity to get swept and internal liquidity to get swept. And yes, I would consider this an internal liquidity sweep, even though it doesn't take out this low. What it does is it stops out everyone who goes long too early, right? So I would consider this an internal liquidity sweep, even when it's sweeping out just the bodies here, and it doesn't sweep out this low. So I would consider this external sweep, this internal sweep. We've perfectly filled the 15-minute reclaimed gap. 30-second outside bar. Boom. Right? This catches the entire low resistant liquidity run. We're below all the true opens. You could even enter on the retest of it, and there's no drawdown on the retest of this outside bar. Incredible. Just incredible. And then we go run all the way up, run all those low resistance highs, and this is a massive trade. So yeah, that was the last thing I want to take a look at. But with that, guys, I am gonna end this video. Hopefully you guys found it helpful or enjoyed or learned something, and I will see you guys in the next one. Peace out.